Ever dreamt of turning your investments into gold without breaking the bank? Well, get ready, because today we're delving into the financial universe of none other than Peter Lynch, the investing wizard whose magic wand was none other than the elusive GARP strategy, growth at a reasonable price. Now, before we embark on this journey into the mind of a legend, ask yourself, what if I told you there's a strategy that could transform your portfolio into a powerhouse of potential, all without the Wall Street roller coaster? Intrigued? You should be, because today will be the compass guiding you through the maze of finance and investing. Today, we're not just uncovering secrets, we're decoding the very DNA of Peter Lynch's success. So don't just watch. Subscribe, because wisdom is about to be dropped that'll reshape the way you view investing. Now hit that subscribe button, and let's kick off the revelation of the strategy that made Peter Lynch a legend. Starting up with, who is Peter Lynch, and what is GARP really about? Now imagine the bustling streets of Wall Street, a financial labyrinth where every whisper holds the promise of untold riches. As you stroll through this concrete jungle, you catch wind of a strategy, a whispered legend that transformed mere mortals into investment gods. It's not just a strategy. It's the holy grail of investing, a treasure map leading to untold wealth. Today, fellow financial explorers, we embark on a quest to unravel the mysteries behind the legendary investor, Peter Lynch. Now, who is this enigmatic figure weaving tales of success amidst the towering skyscrapers of finance? Peter Lynch, a name synonymous with brilliance in the world of investments. If Wall Street had a pantheon, Lynch would be cast in bronze, his statue standing proudly beside the likes of Warren Buffett and Benjamin Graham. But let's not just glance at the statue, let's explore the vibrant canvas of Lynch's journey. Lynch, a man whose life reads like a financial odyssey, began his ascent on Wall Street as a mere mortal, working his way up from the trenches. What set him apart was not just his knack for numbers, but a profound understanding of the market's heartbeat. Imagine him as the Sherlock Holmes of finance, deducing the market's mysteries with a shrewd eye and unparalleled intuition. In the financial saga, Lynch played the lead role as the manager of Fidelity's Magellan Fund from 1977 to 1990. His tenure was not just a chapter, it was an epic, an era marked by an average annual return of 29%. This staggering figure sent shockwaves through the financial realm. But what was the secret elixir that fueled Lynch's success? Enter the GARP strategy, growth at a reasonable price. It wasn't just a strategy, it was Lynch's Excalibur, the blade that sliced through market complexities. GARP wasn't about chasing after every shiny object in the financial cosmos. It was about finding gems in the rough, companies with solid growth potential that didn't demand a king's ransom for their stocks. To Lynch, investing was more than just numbers on a balance sheet. It was a narrative, a story woven by the ebb and flow of market forces. He wasn't a mere investor. He was a storyteller, deciphering the tales companies told through their financial reports. GARP, in Lynch's hands, became a compass navigating through the stormy seas of market volatility. So, as we stand on the precipice of financial exploration, gazing into the abyss of Wall Street, remember that we're not just chasing strategies. We're deciphering the stories that make legends. Peter Lynch, the maestro of the market, didn't just play the game. He composed the symphony that echoes through the corridors of financial history. And today, we're decoding one of his masterstrokes, the GARP strategy. Stay tuned for the unraveling of the financial epic. Next up, explaining GARP. Let's venture into the heart of Wall Street alchemy, explaining the magic behind GARP, the growth at a reasonable price strategy that transformed Peter Lynch into an investing sorcerer. Imagine you're in a bustling marketplace of stocks. On one side, you have stocks soaring to the stratosphere with promises of unprecedented growth, akin to the flashy sports car you've been eyeing, but with an eye-watering price tag. On the other side, there's a quieter corner with stocks showing steady growth potential, much like a reliable hybrid car that offers both efficiency and value for money. GARP is your GPS in this marketplace, guiding you to that sweet spot. Companies exhibiting robust growth potential without demanding an arm and a leg for their stocks. It's the Goldilocks strategy of investing, Not too hot, not too cold, just right. Now let's take a detour into the world of coffee. Imagine you're at a cafe faced with two options. One is an exotic, limited edition brew with an astronomical price tag, promising a caffeine experience like no other. The other is a well-brewed cup of your favorite blend, offering a satisfying kick without the hefty price. GARP is choosing the latter, the sensible, satisfying option. To break it down further, let's look at a real-life example. Consider the retail giant Johnson & Smith Corp. In a world where everyone's chasing the latest and greatest, Johnson & Smith Corp. has been quietly growing its earnings at a robust 8% annually. It's the unsung hero, not making headlines, but steadily adding value to your investment portfolio. Think of it as the dependable friend who's always got your back. Now imagine attending a magic show where the magician pulls out two rabbits. One rabbit, named, is doing acrobatics, drawing gasps from the audience. The other is casually sipping on a carrot smoothie. GARP is the wise magician who knows that while the first rabbit may dazzle, it's the second one who won't disappear in a puff of smoke when the market gets tricky. So remember that if at a magic show, consider yourself witnessing, and the magician pulls out two rabbits. One rabbit, let's call it High Flyer, is doing backflips, attracting ooze and ash from the audience. The other, Steady Eddie, is calmly munching on carrots. GARP is the wise magician who knows that while High Flyer is flashy, Steady Eddie is the one you can count on for the long haul. In the realm of real-life success stories, think of legendary investor Warren Buffett. He didn't amass his fortune by chasing after every glamorous investment opportunity. Instead, he adhered to a philosophy akin to GARP, focusing on companies with enduring value at reasonable prices. So, as we navigate the financial seas, remember that GARP isn't just a strategy, it's a philosophy. It's about being the discerning investor who seeks out diamonds in the rough, the underappreciated stocks that have the potential to shine brightly without burning a hole in your portfolio. Stay tuned as we unravel more layers of this financial masterpiece crafted by the legendary Peter Lynch. I hope this video is useful for you. If you want more videos like this, please comment "video" and I'll keep making them. Now let's embark on a captivating expedition into the heart of Wall Street's treasure trove, where GARP, the growth at a reasonable price strategy, unveils its magic in the most enchanting way. Imagine you're navigating through a bustling market of stocks, akin to a lively bazaar filled with treasures waiting to be discovered. On one side, there's a stall adorned with the shiniest jewels, stocks promising astronomical growth, like the mythical philosopher's stone that can turn anything into gold. However, these gems come with a princely price tag, a dragon guarding its hoard. On the other side, a modest booth offers gems that may not sparkle as brightly but promise consistent growth, much like a humble but reliable compass leading you to hidden treasures. GARP is your compass in this bustling bazaar, pointing you to the gems that balance growth and affordability. It's the financial map leading you through the labyrinth of options, ensuring you don't end up in a mythical maze with no way out. Let's wander into the world of tech giants, where innovation is the currency, and every company is vying to be the next mythical creature of the financial realm. Imagine TechWiz Corp., a company with an otherworldly 15% annual growth rate. Now, in a market infatuated with unicorns and dragons, you might expect TechWiz Corp. to demand a king's ransom for its stocks. However, GARP comes into play, revealing that despite its stellar growth, the company's stocks are priced reasonably, like discovering a dragon egg without mortgaging your castle. Transitioning from this high-tech expedition, let's step into the world of everyday heroes. Meet Sarah, an ordinary investor navigating the financial landscape armed with nothing but determination and a trusty GARP strategy. She stumbles upon XYZ Tech Solutions, a company quietly dominating the widget industry with a solid 12% annual growth. While not making headlines like the tech giants, XYZ Tech Solutions, much like a superhero working behind the scenes, is steadily growing without the fanfare. Now let's add a pinch of humor to this financial tale. Picture a comedy club where two stand-up stocks take the stage. One, named Rocket Riser, boasts about its skyrocketing growth, making the audience laugh with its tales of financial acrobatics. The other, Steady Eddie, walks up calmly, sipping on a cup of coffee, and delivers a punchline about consistent growth without the market roller coaster. GARP, the comedy club manager, knows that while Rocket Riser might bring the laughs, it's Steady Eddie who'll have the last laugh when the market applause fades. In the world of real-life success stories, consider the irony of Susan, an investor who didn't chase after every financial fad but embraced GARP. Her portfolio, much like a well-written story, grew steadily over the years, avoiding the roller coaster of market volatility. So, as we wrap up this captivating journey through the market bazaar, remember that GARP isn't just a strategy. It's the key to discovering hidden treasures in the financial landscape. Stay tuned as we unfold more tales of financial enchantment and unveil the strategies that turned ordinary investors into legendary adventurers. Moving on to the ironic twist. Now, let's venture into the realm of irony, where the plot thickens and the script takes an unexpected turn, adding a layer of humor and surprise to our exploration of the growth at a reasonable price. GARP strategy. Imagine you're at a financial carnival filled with attractions that promise thrills and spills. One booth, labeled Hype Haven, showcases stocks that glitter like confetti, each one vying to outshine the other with promises of overnight success. On the opposite side, there's a modest booth labeled Steady Grow, where stocks, much like a quiet magician, promise consistent growth without the dazzling fireworks. The irony unfolds when we consider the tale of two investors, Bob and Alice. Bob, enticed by the allure of flashy stocks at Hype Haven, eagerly invests in companies with skyrocketing growth rates, the financial equivalent of riding a roller coaster through a storm. Meanwhile, Alice, adopting the GARP strategy, calmly invests in steady growth stocks, avoiding the chaos of market ups and downs. In a twist of fate, the financial roller coaster takes a nosedive, leaving Bob gripping the safety bar for dear life as his high-flying stocks plummet. On the other hand, Alice, sipping metaphorical tea at the Steady Grow booth, experiences a gentle rise in her investments, like a serene boat gliding across a calm financial lake. To add a dash of humor to this ironic tale, picture a comedy club where two stand-up stocks take the stage. One, named Flashy Flop, boasts about its meteoric rise and sudden crash, eliciting chuckles from the audience. The other, Steady Chuckler, calmly strolls up to the mic and delivers punchlines about consistent growth without the market drama. The comedy club manager, a GARP enthusiast, appreciates the irony that while Flashy Flop might bring the laughs, it's Steady Chuckler who leaves the audience with a smile. In the world of real-life success stories, consider the journey of Mark, an investor who initially fell for the allure of quick gains but eventually embraced the GARP strategy. Mark's portfolio, much like a well-written comedy, transitioned from unpredictable twists to a storyline of steady growth. Now, let's explore the irony in the metaphor of a race. Picture two runners, Runner 1 and Runner 2. Runner 1 dashes off the starting line with lightning speed, leaving the crowd in awe. However, as the race progresses, Runner 1 exhausts his energy and stumbles, while the consistent and measured strides of Runner 2 lead him to a surprising victory. In essence, the irony lies in the unpredictability of financial markets, the very attribute that attracts many investors to flashy, high-growth stocks becomes the source of their downfall. GARP, with its ironic twist, highlights that sometimes the tortoise does indeed outrun the hare in the financial race. As we unravel these tales of irony and humor in the financial world, remember that GARP isn't just a strategy. It's a wise storyteller, revealing the unexpected twists and turns that make investing both thrilling and unpredictable. Stay tuned as we continue our journey through the fascinating landscapes of finance. Now let's take a look into how this strategy made Peter Lynch a legend that he is. In the grand tapestry of Wall Street, Peter Lynch emerged as a legendary figure, and the growth at a reasonable price, GARP strategy, played a pivotal role in crafting his success story. So let's demystify the elements that transformed Lynch into an investing icon, using GARP as the compass guiding his financial odyssey. Imagine GARP as the backstage manager in a blockbuster show, orchestrating the seamless flow of financial narratives. Lynch, donned in his investing armor, stepped onto the stage, armed with a strategy that combined growth and value. The brilliance of GARP lies in its simplicity. It's not about decoding complex financial equations, it's about finding companies with solid growth potential that won't break the bank. Now, let's navigate through the financial marketplace as if it were a bustling shopping district. Lynch, the discerning shopper, wasn't enticed by the dazzling displays of overvalued stocks. Instead, he wandered down the aisles, seeking out hidden gems, stocks exhibiting robust growth but at a reasonable price. This practical approach is akin to shopping for high-quality goods at a reasonable cost, ensuring value without unnecessary splurging. As Lynch embarked on his journey, the GARP strategy became his trusted travel companion. Think of GARP as the GPS system, guiding him through the labyrinth of market trends. It's not about taking the riskiest shortcuts or following the flashiest routes. It's about choosing the path that leads to sustainable growth without the unnecessary market detours. In the world of tech innovations, where everyone is chasing the next big thing, Lynch's GARP strategy acted as a technological alchemist. He didn't fall for the allure of every groundbreaking gadget, much like avoiding the temptation of the shiniest tech toy in the store. Instead, he identified companies with innovative potential, but with stocks priced reasonably, ensuring he wasn't overpaying for the technological wonders of the era. Now let's add a sprinkle of humor to this financial tale. Picture Lynch as the calm protagonist in a comedy club filled with stand-up stocks. On one side, there's Flashy Flop, the comedian with wild market antics, and on the other, there's Steady Chuckler, delivering reliable punchlines without the market drama. Lynch, with his GARP strategy, appreciates the humor in the market's unpredictable stand-up routine, and wisely opts for the steady chuckles over the flashy flops. The genius of GARP is its adaptability to different market conditions. Whether the market was a bull or bear, Lynch's strategy allowed him to navigate the complexities with ease. It's like having a versatile toolkit, not just a hammer for every problem, but a carefully selected set of tools tailored for specific challenges. In conclusion, the GARP strategy was the magic wand in Lynch's hands, transforming him from a mere mortal into a legendary investor. It's a strategy that speaks the language of both seasoned investors and those new to the financial stage. GARP, with its blend of growth and value, demystified the world of investing, making it accessible, engaging, and ultimately successful for Peter Lynch. Pros and cons. Embarking on our journey through the growth at a reasonable price, GARP strategy, it becomes necessary to highlight not just its benefits but also its potential pitfalls. By doing so, investors can navigate the intricate landscape of financial decisions armed with clarity and insight. First up, the advantages. Navigating the road to financial success. The versatility of the GARP strategy stands as its crowning glory, akin to a multifunctional tool in a financial toolkit. GARP empowers investors to seek out companies boasting robust growth potential while maintaining a reasonable valuation. This flexibility creates an ideal scenario where a stock is both a high performer and reasonably priced, a financial sweet spot that every investor aspires to discover. Beyond its versatility, GARP acts as a safety net in volatile market conditions. Its emphasis on reasonable pricing serves as a buffer against market fluctuations, akin to shock absorbers in an investment vehicle. As the market encounters bumps, GARP smooths the ride, mitigating the impact of sudden downturns and providing a more stable investment experience. The advantages extend further to champion growth consistency. GARP focuses on companies exhibiting steady growth, eschewing the allure of sporadic market bursts. This reliability contributes to a predictable and less stressful investment journey, aligning seamlessly with the principles of legendary investors like Peter Lynch, who valued sustainable growth over erratic market swings. And now, disadvantages. Navigating the pitfalls. Nevertheless, no strategy is without its flaws, and GARP is no exception. A potential drawback lies in the subjectivity of determining a reasonable price, influenced by market conditions, investor sentiment, and economic factors. This subjectivity can lead to misinterpretations and varying conclusions about a stock's alignment with GARP principles. The dynamic nature of growth stocks presents another challenge. In an ever-evolving market, what may seem reasonably priced today might not hold true tomorrow. This poses a challenge for investors using historical data to project future growth and valuation, demanding a vigilant eye on the market's fluid dynamics. Moreover, GARP may not be universally suitable. In bull markets, where high-growth stocks often dominate, the emphasis on reasonable pricing may cause GARP-focused portfolios to underperform. It's imperative for investors to assess whether the strategy aligns with their risk tolerance, financial goals, and the prevailing market environment. Despite these challenges, GARP's advantages often outweigh its disadvantages when wielded effectively. The strategy stands as a potent weapon in an investor's arsenal, offering a balanced approach to growth and value. Acknowledging both its strengths and weaknesses empowers investors to make informed decisions as they navigate the intricate and ever-changing world of finance. Implementing the GARP strategy in your lives. Now that we've unraveled the magic behind the growth at a reasonable price, GARP strategy, and witnessed how it transformed Peter Lynch into a legend, let's dive into practical ways that you, too, can implement this strategy in your own financial journey. In this segment, we're not just talking theory. We're handing you the keys to the financial kingdom. Imagine GARP as your financial superhero, ready to leap into action. First on the agenda, conduct a financial inventory. Think of it as cleaning out your closet, where you assess each item's value and relevance. In this financial spring cleaning, evaluate your investment portfolio. Identify stocks that exhibit growth potential without the bloated price tags. It's about decluttering your financial space, leaving room for gems that align with the GARP philosophy. Transitioning from the closet to the kitchen, let's talk about the GARP recipe for financial success. Imagine you're preparing a balanced meal, where each ingredient contributes to a wholesome dish. Similarly, in the financial kitchen, diversification is your key ingredient. Spread your investments across different sectors and industries, ensuring a well-rounded portfolio. This diversification is like having a buffet of options, each with its unique flavor of growth at a reasonable price. Next on the menu is patience, the slow-cooking method of financial success. GARP is not a strategy for those seeking instant gratification. It's the crock pot of investing. Picture yourself preparing a stew, allowing the flavors to meld over time, resulting in a rich and satisfying dish. Similarly with GARP, let your investments simmer and compound over the years, yielding a financial feast down the road. Now let's step into the shoes of a GARP detective, searching for clues in the financial landscape. Imagine you're solving a mystery, carefully examining each piece of evidence. In the financial realm, these clues are the financial reports of companies. Dive into the balance sheets, income statements, and cash flow statements, deciphering the narrative each company tells. GARP is about being the Sherlock Holmes of finance, uncovering hidden gems that may not be making headlines, but have the potential to be the heroes of your financial story. In the world of tech gadgets, where everyone is enticed by the latest shiny object, GARP encourages you to be the discerning shopper. Think of it as resisting the urge to upgrade your smartphone every time a new model hits the market. Instead, identify companies with innovative potential that aren't commanding astronomical prices. GARP is about being a savvy consumer, choosing value over unnecessary splurges. As we bring this GARP implementation guide to a close, consider the analogy of GARP as your financial GPS. Just as a GPS guides you through unfamiliar territory, GARP navigates you through the market landscape. It's not about taking the riskiest shortcuts. It's about choosing the path that leads to sustainable growth without unnecessary detours. So, whether you're cleaning out your financial closet, cooking up a diversified portfolio, practicing patience, playing detective in the financial landscape, or resisting the allure of shiny gadgets, implementing GARP is about aligning your financial choices with a strategy that has proven to be the cornerstone of legendary investors. Stay tuned as we continue our exploration into the practical applications of GARP and unlock the secrets to financial success. As we wrap up this journey through the financial landscapes and the legendary strategy that shaped Peter Lynch's success, let's reflect on what we've discovered. Are you intrigued by the idea of uncovering hidden treasures in the stock market, much like Lynch did with the GARP strategy? Or do you see the potential for steady growth without the market roller coaster? Oh, but wait, the most important question still remains. So how will you apply the principles of GARP in your own investment journey? Are you ready to embark on the path of finding stocks that balance growth and affordability? We'll share your thoughts in the comments below. We'd love to hear your perspective. And remember, the world of finance is vast and ever-changing, filled with opportunities waiting to be explored. So stay tuned for more insights, strategies, and captivating stories that will empower you on your quest for financial success. If you're interested, get any audiobook of your choice for free using the link below the video. The purpose of this video is to educate you on various aspects of what you need to know about trading versus investing, and not to give you any specific advice. It may involve risks and uncertainties, and you should always do your own research and consult with qualified professionals before making any financial decisions. However, past performance does not guarantee future results, and you should always consider the risk of investing and trading before putting your money at stake. If you find this video helpful, I recommend you watch my next video. Don't forget to like, share, subscribe to our channel. I appreciate your support, and I hope to see you in my next video. Thanks for watching. Until next time.